Good afternoon, everyone. Monica Jazik here from Real Property Investments, bringing you our free Tuesday weekly webinar. And today we have a very interesting guest on our show. We have Robin Booth, who's coming all the way from South Africa. Hi, Robin.
Good evening from our side.
Yes, you are far ahead of us for sure. So I thank you for accommodating this time change for sure. And thank you for coming on. I know today I'm really excited to learn all about investing in South Africa. So we've been bringing these extra webinars ever since the COVID-19 started hitting to bring people more information. And it's been a real point of learning for us, since we've had the opportunity to really network with our real estate friends from all over the world and genuinely learn how this global pandemic has not only been, affecting us here in Ontario, where we're screening from, or even in Canada or the US, but how it's affecting people from all over the world. So could you start by giving us a bit of a background about yourself and how did you get started as a real estate investor in South Africa?
Well, okay. So yes, thanks very much. So my name is Robin Booth. I invest here in South Africa as a professional property investor. I have multiple different investment strategies, from Airbnb to commercial to shopping centers to just normal residential to communal living, student housing. And actually I do invest in the United States as well. I have a portfolio there. So I really also like to hedge my finances offshore as well, just based on our currency. And, when you asked, how did I get into real estate? Well, that's actually a longer, interesting story. And probably actually best that I preface that by saying that I actually qualified as South Africa's first male preschool teacher way back in the late 1990s, which got me into real estate in a strange way, because I started a school. And of course, most people know that, well, to start a school, you're going to have property. So I bought property to run my school on, and very quickly found that the two are totally different businesses. Running a property and running a business, or in this case, a actual school, preschool and a primary school for children, are two different things. And when I sold my school, I kept my property and a new school rented it from me. And the light bulb went off in my head that said, this is how you do business. Much cleverer in getting someone else to pay my bonds and my mortgages. And actually suddenly I realized that, hey, this is property investing in a much better level for me. And of course, I realized that with this kind of model of investing in property, getting tenants, they pay my bonds and my finance costs, I can actually begin to live the life that I love to live. And part of that was obviously how I met you, because I came across to Canada, did some travels in the United States. Last year alone, I spent 111 days out of South Africa, just traveling 3 times to Bali, to Thailand. And that's all because of real estate. So I'm a major fan of real estate. I love it, but what I love more is the access to choice and to time and to finances that it gives me, so that I can spend it in the way that I want to, spend my time with my family or, travels. And I think that for me is what is so exciting about it. And of course, we're going to be opening those conversations tonight. How can we all, everyday person out there, take advantage of real estate in some way or some model, or some strategy, so that no matter where we are on that line, we can actually utilize it to our advantage as well. And I think that's just super exciting. So
Absolutely.
There's the story.
I totally agree with that messaging. I think real estate really, it's not about the money that's generated from real estate or the ownership of the real estate. It's the freedom and the life that real estate gives you. And that's also really what we push people at Real Property Investments, is we love real estate because of the opportunities that it gives us, such as travel, such as freedom, time with your family, because you have a family as well, correct? And also as time to do what you really want.
Correct. And coming back down to talking about time and giving freedom to what you want, we might open that conversation up later around looking at how I love sports. I love kite surfing. And I live in Cape Town. That's where, well, I'm going to say my primary base is in Cape Town, because I can't actually say I have permanent residence there, because I actually don't have permanent residence at the moment. Wherever I choose to end up, is now my primary residence. But I love kite surfing, and there's no ways many years back I could actually afford to live on the beachfront on Kite Beach, which is Cape Town's world famous kite surfing destination, just because of the rentals were just too high and the purchase prices were too high, because Cape Town is very much, even though we're in a kind of developing nation here in South Africa, our major cities are still pretty much first world in many ways. So, like, how did I actually end up living on the beachfront for free? In other words, I didn't have to pay anything because of real estate and because of rental arbitrage and actually using Airbnb at that stage. And I ended up living exactly where I wanted to be. I could just walk out of my house and go kite surfing. It was fantastic. So again, clever strategies can really create a unique and fantastic way to create the lives that you love to live.
That's amazing. So you mentioned you have real estate in South Africa, you have real estate in the United States. Which was your first investment move? Was it in South Africa or was it in the United States, aside from the preschool?
It was in South Africa. And what I realized very quickly is, and as we begin to chat about real estate, for me, we really need to know what we're wanting out of it. You already brought into the conversation that real estate gives us access to finances, which give us access to choice. And based on that, I believe that every person, every investor should have the end goal in mind, which is, what do I actually want out of this? What is the lifestyle that I'm wanting to create? Is it just to fund my children's education? Is it because I want more travel? Is it because I want really beautiful clothes? Reason for really unlocking that. And I knew that for me, it would be that I wanted to travel and I wanted to have time, which meant I needed to know how to automate or manage remotely. So I set myself a challenge, which was, if I can manage property in the United States, so that's probably about a 25-hour airplane flight away, if I could learn that, then I would not have to invest in the property next door. That would open me up to being able to invest and manage anywhere. And I set myself that goal, and I'm so grateful for it, because now I can travel wherever I want to the world and still have the finger on the pulse of actually what's going on in my properties, and still manage them fairly automatically because of the systems that I've put in place. And that was my main drive of actually going offshore into the USA at that point, was I had to learn how to do it. Otherwise, I would just be sucked into the business of real estate investing as opposed to having a business of real estate. And I think that for me was the major distinction. And I set myself that goal back in 2012 was when I first bought in the United States.
Where did you buy in the US, and what kind of property did you buy?
So my introduction to the United States was the kind of coming out of the 2008, 2009 crash. We were just on the, still below what would be the good equity to get into. And we bought 3-bed, 2-baths in Atlanta, Oklahoma, and in Florida. So landlord-friendly states. As a foreigner, to get finance was challenging. We had to go the private financing, which at that point was meant to be a short-term strategy, and it really was challenging because I don't want to badmouth the USA agents out there, but what we found is, especially with foreign investing, there was a lot of bait and switching. We were promised, we'll give you 5% or 6%. And non-recourse and a whole lot of things, and then suddenly it came down to, well, yes, but it's going to be this later on, and we want rental reserves of 12 months, and your funding has to really be in the States for a certain period of time. And actually the paperwork became really tricky. And then we actually found out that the better model was using subject to, so we could actually just buy subject to, obviously the sellers keeping their mortgages in place. And suddenly, within like 5 days, without having to have anything else, we could suddenly own property in the United States as obviously a non-resident alien. And that just opened up a whole beautiful new way of investing, because now we were accessing local investors' interest rates from the bank, 3.5 or 3.75 at those times where it was, which is a very different to 8 or 9 or 10% as a foreign investor. And perhaps I should just also add, Monica, that here in South Africa, our normal interest rates are around 11%. That's what we're for our funding. This isn't like, we're used to 2 or 3%. I mean, we would jump at that. So for us, because we were already paying that on our finance, we would still be
It
willing to pay.
wasn't too much of a shift. So,
Correct.
yeah, but it still is a lot. Now, what in 2008, I don't know what the dollar was in 2008, but how does it compare? What is your dollar in South Africa? And how did it compare to the US dollar at that time? And how does it compare to the US dollar today?
Whoa. Well, we can actually even just look at the last few weeks, because since COVID, we've lost 30% against the dollar. I mean, it really is quite something just to see that dramatic shift.
So you're like us then?
Pardon?
You're probably on par with the Canadian dollar then.
Well, Canadian, I think it would be 10 to 1 for us. So 10 of our rands to 1 Canadian dollar. At the moment, we're about 17 rand to $1. When I first bought in this, it was under 10 rand to $1. So literally it's doubled just in the last 10 years, or it's weakened, if you want to call it that. But a month, it was around 14 rand to the dollar. And of course now, we hit 19 rand to dollar. So that's nearly, as I said, a good 40% change. And of course that just, crashed a lot of our economy, besides lockdowns and a whole lot of other stuff. But it did also mean that there was a very big interest from the foreign investing market to say, these properties already are so cheap compared to the power of the dollar. Now with the exchange rate even changing more so, what you could actually get here in a real first world kind of city like Cape Town on the waterfronts actually suddenly became very lucrative for a lot of foreign investors. So we definitely saw an influx of interest.
So where do most of your foreign investors come from? Are they mostly from Asia, or what countries are most of them from?
No, most of them will still be the European market. That's a very big one, obviously from the UK, but significantly, from Holland and, many just the European nation. And of course, then we do get from America. We haven't, in South Africa, if we're looking at the Asian markets, it's more I'll probably say in Zimbabwe and Botswana and those areas where there've definitely been a much greater influx of Asian workers and Asian investors going into there. In South Africa, we haven't had as much compared to the rest of the Southern African countries. I would assume we're going to see more of that, but at this stage, I think the main thing for most people is if they're buying here in South Africa, they're buying because it's a second home or a third home or a great location that they want to come to as a holiday destination, not just an investment. Because as we know, our currency, the biggest challenge is hedging against the currency fluctuation. You want to bring your money in, considering that we have like besides what I was saying about the fluctuation of our currency, just our inflation rate is still much higher than many other countries. So whether that's between 4 and 6%, that's also going to change our market. And yes, we may have a capital growth of our properties and the increase of asset value. It's still going to just be undermined by the weakening of our rand. So our experience, it's more around people who are saying what they could get here as a lifestyle choice is incredible for the power of their currency. But to bring money in, to do a deal and take it out, that's a different conversation. And that's
so what you're saying is it's more of a long-term investment model that you kind of have to take these factors into consideration to goof-proof your investment. We don't just park money in, flip a house in South Africa, take it out. There's a lot more to consider than that.
Correct. Yeah.
So if these people are buying them for lifestyle choices, are they renting them out when they're not using them?
Well, for a lot of them, they wouldn't even need to, because it's just so reasonable, like even just for them to park their money and just have it there without anything else, especially if they're saying, well, this is my personal home and I want my personal furniture and effects to be there. But otherwise, the Airbnb rental market in this area that we're talking about, those ones where predominantly people are looking for their vacation or second homes, they will then let those out with either short-term letting agencies or through Airbnb agencies. And they will do incredibly well, because there are still, and we're talking, let's say Cape Town specifically, it's an international tourist destination. So you're going to have a lot of internationals coming here looking for that. And even those daily costs, for example, now what you're paying, the daily rate is still good in their currency. And that's why we get people coming here. They'll come and spend like whole 1 month or 2 months here in their view. So it's an exciting place to see if that's the market that you want to get into. So possible.
So tell us what like the price points are. Like how much does it cost to buy actual real estate in South Africa?
Well, it's like how long is a piece of string, right? If we're talking about a mean household price in South Africa, you're going to be looking at, and I'm assuming if we're going to use Canadian dollars, if I remember correctly, what is your exchange rate with the US currency at the moment?
So we're at about 71 cents to the dollar. So we're not very good either right now.
Yeah. So for us, probably if I looked at just from what I remember coming there to Canada, it was more or less a 1 to 10, as I mentioned. For here, we're looking at probably between 80,000 to, well, actually even less than that, probably about $60,000 to $70,000 would be the mean or an average entry-level house, 3-bed, 2-bath that someone is getting into in a nice neighborhood. That would be an investment, kind of like a bread and butter. That's what a lot of investors are going for. Of course, then we've got the segments, like I mentioned in Cape Town, where we're actually talking now millions of dollars as well, because this is where, it's really pristine buildings, totally modern, really great. And of course, it's a whole different market. That market has been hit by the current COVID and obviously all the travel restrictions, because that is, as we kind of know, it's a niche market. So it's going to be impacted significantly by, as well, investors saying, well, I want my money out. So they're going to cut their losses and then take it out. And those houses are going to take at least a year to sell. So of course, they're going to really drop those prices. They're going to slash them to try and get their money out quickly, especially if our rand deteriorates so much. You can imagine that if they've just bought a year ago, that they've lost over 30% of that house value just in currency, not actually in South African value, but just currency alone. That's going to. But if I compare that again to just what I could buy in America to what I could buy here, it would be easily what I'm getting here for value is way more. We don't do stick builds. Most of our stuff is brick, plastering, hard material. It's like really solid. So it's a different experience. When I first went to America and suddenly everything was stick built and framing and, quite a different experience compared to here. And of course, though, Monica, we've got to remember that, a significant portion of our population is unemployed and is seriously below the poverty level, which means they just do not have access to financing or even to those entry-level markets. And I think that really needs to be brought into account. I think unless you live here, I don't think you actually realize to the degree that happens. I was thinking the other day when I was hearing about, especially from the US, about their kind of like social grants to help people, that monthly check that came through for many people. I think it was about, $1,200, $1,500, if I'm not mistaken.
Or the CERB, the Canada Emergency Response Benefit, it's $2,000 a month.
Wow. Okay. So take a guess at what the South African social relief grant was here per month for these people.
Negative $2,000. Maybe $100 a month?
Not even that. It was probably around $15.
What's the point even at that, especially with inflation, going up 4%, we're at 1.75%.
But here is the thing, that whatever those $15 or $20, which it comes out to, will make a difference to a significant number of families. That is the sad part about it. For you and I, we say $15. Are you crazy? It's like, what are you going to do with that? That's not even like 2 cups of coffee. But for a significant portion of South Africans who have had no income, actually, believe it or not, that's going to make a difference. And that for me just brings to home when you're talking about standard of living and actually the realities of our South African context. That actually is a sure way of just showing, the discrepancy between, all
and that's why I was really excited, Robin, about doing this today, because I really kind of want to give people a better understanding of different parts of the world and how so we already touched on these interest rates, which are 8 to 10% normally for South African people. We also talked about the inflation, which is over 4%, which is crazy. We spoke about the average price point. So you can get a great house for between 60 to 80,000. I know you're in the rand, but is that US dollars for that, or
Yeah,
is
that's
that
right.
in
That's
rand?
right. From our side,
Okay.
about 700,000 to R1,000,000 is an entry level, well, not entry level. That's a good investment bracket that people go into. That we see a lot of around South Africa. Families are investing in from that perspective.
Yeah.
That's a self-standing house.
And so that's a great price point as well. We'll get into the rents after too, but I'm also interested in knowing, because I'm really interested now in what you said, this $15, which we're going to through, is a huge deal. Tell us more about what's happening in South Africa, in the economy in general. I know that there are a lot of different economic and social problems. What are some things that kind of affect yourself and as an investor and the economy as well? And is anything being done to generally improve the climate of the entire country?
So we were already heading into a serious recession before COVID hit and before we knew we were entering into it. So we had already just been downgraded from Moody's rating system into junk status, right? We had just shifted from we're barely surviving into actual, as an investor strategy, to junk status, which actually then meant that a whole lot of these funds and companies that invest in South Africa by mandate actually had to sell large portions of their portfolio, because their mandates are that as soon as it hits junk status, they needed to get rid of that. So we were ready into looking into that. And of course, then South Africa saw what was going on around the world around the COVID-19 pandemic, and we just locked down. And a lot of people were saying, well, why are we doing that? And when we had at that point, I think maybe only 40 or 50 cases, and we were already into a level 5 lockdown, which is no movement, nothing could be done, no cigarettes, no alcohol, you couldn't buy them, couldn't sell them, you couldn't move. It was just total lockdown. And we've had that literally for a month and a half now, for 2 months, while they said, obviously, we want to get our emergency capabilities and our infrastructure speed. Believe it or not, that 2 months later, you still can't buy cigarettes. Really interesting. There's been an uproar about that here in South Africa. And only yesterday, could you actually buy alcohol for the first time. So there's a lot of these restrictions that have come in that have really questioned what our government is really trying to achieve. But in the context that, if you consider that the majority of our population here in South Africa are living in conditions where you are literally 3, 4, 5, 6, or 7 people in a room, back to back in other words, in a settlement, in an informal settlement, a settlement where there's no way you can social distance. And the real concern is when it gets into there with our already high increase of TB, tuberculosis, and other ailments, especially with our autoimmune diseases that we've already got here in our population. The real concern is we could just be hit so hard. And of course, it still is very real. So with all of that going on, you can imagine that everything just went totally in shock, right? The major banks stepped in and they said they're going to look at doing relief programs. They did mortgage payment holidays for at least 3 months. So at this moment, I think we're just managing. They've released now that most of the businesses can go back, all retail can go back as of yesterday. And they're trying to just prevent our economy from totally just spiraling out of control, and to make that. And in the real estate market, we're really starting to see those deals come through. Obviously, all the commercial side, and I think that's worldwide, just everyone was claiming force majeure. They're refusing to pay rent, and lots of chances happening. So it's been a very interesting period of time, and as real estate investors, we're preparing for what's coming down the line, most certainly. But I'm sure we'll chat about that. So to preface, from my side, I'm always going to say that no matter the pandemic, all those sayings about if you're a real estate investor, you need to take advantage of the situations. My belief is, as long as we're ethical and we're really looking at solving the problem of the seller, then we will do well, and then I can sleep at night. I'm not here to be a shark, to kick people out and to really just crush them. I'm here to solve a problem that they have, which is they're short of cash, or their credit's going to be impacted. And if I can provide a solution to them on that, then I will sleep well at night, knowing that I'm also doing my duty as a service to my community.
Absolutely. I think that's been the key here too, is the communication and the camaraderie between the tenants and the landlords. Most tenants have not stopped paying their rent, and we also have been granting these relief programs in the event that they do. So there's a lot of misconception that, landlords are on these rent strikes, or sorry, tenants are on rent strikes. And most of them are not. And sometimes us landlords, we've had to make some adjustments. We've had to cut some breaks because we also have a high cost of living here, and $2,000 a month. Some of the rents in downtown Toronto and different areas are also about $3,000 a month. And if they don't have a job, they're still in a negative deficit. And even in our other areas around Toronto, rents are averaging about, $1,700 a month, even just for our top floor units, basement units, $1,400, $1,500. And they still have to eat. They still have families to provide for. So even though they've been given the relief, they can't always pay the rent on time, or they might be waiting for their unemployment, or, the job loss has been huge. So what are the rents that people pay in South Africa? And are you like Australia, where you charge weekly? It was funny because we had a global panel. I think we invited you on it, and it was at 3:30 in the morning. So I said, Robin, I think we should do our own interview because I like you too much to have you up at 3:30 in the morning for us, which you were willing to do, and thank you for that. But it was funny because the Australian expert was talking about, and then they're paying their rent $300, and everyone's faces were going, $300. And I said, everyone, it's weekly. So your rent is monthly?
Yes, definitely correct. I know in the UK they do very much weekly there as well, but for here it's monthly. And as a general rule of thumb, I believe that compared to America, our rent to values are lower. So in other words, for $100,000 property, we would probably only get about $800, $700 a month gross on that. So as soon as everything else kicks in, it's in my view, those aren't deals that I go for. I want free properties where my income is going to cover all my expenses, including 100% financing. And those are here in South Africa. We've got them. We can find them. But in a general rule of thumb, that's what our rental to values are. And it makes real estate investing for most people a very long-term strategy where it's negatively paying in for your first 5 years to hopefully break even, to then hopefully in another 3 years to then refinance and extract. And I can understand why a lot of investing in South Africa is kind of like they're shaking their heads saying there has to be another way for us to better at this. And that, as we always know, is education, right? Education is the insights which changes how we see and create opportunities. And that's what both you and I do as well. We have students, and we share with people how we can be in control of that and actually unlock potential, as opposed to just being the recipient of the environment around us.
Absolutely. And I remember what it felt like as a beginner. Like, I knew everyone knows real estate is the way to go. They know it's the number one wealth builder and they want to move forward. And I remember how it felt over 10 years ago, wanting to do it, but thinking I had to buy that house next door. I just didn't know what my options were. And similar to you, what we do is most people, they will buy an investment property, maybe a condo in Toronto or pre-construction or something. Maybe they will buy the house next door because that's what they're familiar with. And they'll cross their fingers and they'll take these negative, income for a while in hopes that it will work out because everyone says it's the right thing to do.
Correct.
And in reality, there is a different way that people can go about it. You just have to learn what that way is. Most of our areas are at least an hour outside of Toronto, but they're all strong economic, high growth areas, and we have to create these real estate models. So maybe single family doesn't work. We'll do a duplex conversion and we'll put the team in place to help do that. Or maybe it's in a university town and we do a student rental. So maybe single family could be neutral, whereas when you're renting out by the room, people could be cash flow positive $1,000 or $2,000 a month. So that's what we really have done. We've identified these ways to take, to show people really how it can work. So in South Africa, can you kind of like privy us to some of an example maybe of one of your investment models that you hold, and how you've gotten this not only this free lifestyle, but even cash flow positive, and how you're really kind of using it to elevate your life?
So, well, let's just split that up into, in this case, two of the distinctions. The one is what I had already mentioned earlier, which was how I kind of really thought, how could I use a more flexible model like a rental arbitrage, especially on Airbnb, to upgrade my lifestyle, not from a space of greed, but because I wanted to live right on the beach and access that beauty, So in this case, it was a 4-bedroom house right on the beach. And originally, and this was back in, I think it was 2014, I couldn't afford that rent for what this landlord wanted. So I said to the landlord, I said, I won't try and discount this rent. I won't try and negotiate it with you. I'll pay what you're asking for the rental, monthly rental, if you just give me written permission that over Christmas and New Year, I can rent out the house for 2 weeks to the tourists that come in. And he said, sure, no problem. And suddenly when I did that, that actually allowed me to just pay what I could afford, because then I had the surplus income of the 2 weeks. And that got that light bulb on that said, well, if I'm making this work, what happens if I just rent the room in the front and do it as an Airbnb single room with its own entrance? And that alone, just the one room on Airbnb, covered 75% of our annual rent for the whole house, which was like, wow. So suddenly we were paying a fraction to live on the beach. We had automated our Airbnb, so we weren't even impacted by them there. And I suddenly realized this is great. And then we said, well, we still got to come up with 25% of the annual rent in order for us to say it's a really free one. So we said, well, why don't we go on holiday? Why don't we let out the house again on Airbnb, but now the other 3 rooms in the house for a larger amount for that period of 2 to 3 weeks, as we had done before. So we did that. We had the room and the 3 other rooms as a general unit. And suddenly that paid for our trip to Thailand for 3 weeks and all our flights and travels and food. And suddenly we had a free holiday and a free year's rent all in one place. And that for me just said, this is something really special for us to keep looking at. And maybe some of your listeners out there are saying like, that's nothing special. We've been doing that for years. Well,
no, I know what they're saying. They're saying, Robin, you're a South African house hacker.
Exactly. But well, 100%. Our term here of a house hack is to have a granny flat, or to maybe have a multi-let on your property, like another unit, not to actually say, how can I really be creative? But then that obviously got us into, well, if we could do this with our house, why can't we actually go and do the rental arbitrage and actually do that again? And the beauty here in South Africa is so few people know that, and so few people understand the professionalism of it, that we totally dominate in all of our areas that we do in Airbnb. And now my students are buying apartments to do Airbnb because it's
you teach people how to do this, how to buy properties in South Africa and how to Airbnb. Now, are you buying the properties, or are they all house hacks where you're renting and you have the option to sub-rent?
So I've got students who do both. For a student who does not have the affordability to actually go and buy an apartment, then what I suggest for them is they do what I did, which is you go and find a house that has a unit that you can house hack, and therefore get that unit to supplement your income, so you literally are staying there for free. And I think one of my students actually did that today. She signed her lease around that, in spite of us being in COVID and with what everyone says, the total shutdown of Airbnb. So just to put it out there, I've still got 75% occupation of COVID, and I'm having to turn away 60% of my guests because they do not meet our level 4 or level 5 restriction criteria, those essential services and for work. So people are chancing it out there. And in spite of that, our strategies are working. So personally, I don't buy to rent, to do Airbnb, because for me, it's not the margin for me is not as great, and I prefer not to have as much risk. So I really like to be able to diversify.
Well, Robin, technically speaking, I know once you follow through your contract with your landlord, that you're not going to be stuck with this property, which is genius really in regards to all these fluctuations with the dollar,
Correct.
With the economy. You hold your word to your landlord. You rent it for your designated time. You have their permission. They know what's
Yep.
happening. You're running it as a business, so they're probably happy. You're happy. But at the end of the day, you almost have like a built-in exit strategy,
Well,
which is phenomenal.
yes. I mean, from
Whereas
the
you have your US real estate, which you actually own.
correct. Well, I mean, here in South Africa, I obviously own also the normal residential buy-to-let as well as multi-let as well as student housing. So I'm tapping into all of those different markets. But from the Airbnb, I love it that I can scale so easily, and it's so easy for me to get out. Again, my clause to my landlord is that I can give early termination, and the requirement is without incurring any penalty costs is a clause which says if I find another tenant who is agreeable by an approved estate agent that tenant replaces my lease, then there's no early termination penalty to me, and how to find a tenant. So I just find a new tenant who stays there, and I can exit with absolutely no risk to me. And that is where it's just so easy. I can take all the gains and I can just say, listen, I'm totally getting rid of my Airbnb portfolio, if that is the case, and my landlord is still happy because they're still getting a replacement tenant. That's the key clause which makes the landlords very happy for me to be their tenant, because they know that when I'm out, they will get a new tenant in, whether it's long term or short term. That's not my my prerogative, but that's the exit clause. So as I said, I like to make sure I'm managing my risk. So whatever, if I can manage, everything else is on the upside. And it's the same with the multi-lets. If I can't have students, I need to have professionals because it's in communal living. I also do communal living properties. So, and if I can't do that, then I want to know I can use that unit for a family, because we've got that's a very high demand for us. That entry bracket level, communal living and low income housing is a massive demand in South Africa, because obviously
is your multifamily model based around low income housing?
In this case, yes, because there's demand for that, and a lot of people just cannot afford to have their own homes. And as I mentioned, a lot of South Africa actually already has an experience of multi-let units where there are sometimes 3 families living on a property, and it's not even a multi-let. It's just that's how they've had to survive.
That's how they live. It's different. It's different. Now, with this $15 assistance, before then, what sort of assistance do these low-income families generally get? Because we've had a lot of speakers come on during this COVID-19, and it appears that the people who cater towards what we call as the welfare or social assistance tenants actually have done the better than people who rent out to these, so great tenants, tourists or people. Do your lower-income people like, I know the $15 is sort of a bit of a novelty. What about before that? Are they is there more certainty in renting to these people? And do you have agreements with government organizations? Or is there no support from the government, really, generally, until now?
So I'm probably not the best person to ask around that, because I don't look to see how to use any of those models specifically in any of my investing, because here for us, the bureaucracy, the admin, is just such a nightmare that I want reliability. So I'm going to look for a tenant who can afford it, who can pay, as opposed to looking at how do I tap into a funding model that can actually do this for me. Even with the student housing, where we do have our government who funds, just that if we're talking administration, consider this and tell me if you would invest in this kind of scenario, that a government says we will pay for 10 months of the year lease for a student. And the problem is the student has to first register for the university, which means that by February and March, they're going to register. So at this point, you still don't know if they've registered. Once they do that, they then have to apply for the funding. So maybe by April or May, they'll be told they've got the funding. So what are you going to do? Are you going to say, sure, I'll start renting this out to you in January, based on you may actually get into the university in February or March. You may then get funding by April or May, and then they'll only pay you in May and in November. And I'm like, that's just
I think I might find my own tenants.
Exactly. So the only difference there is if you've got, and we're looking into it, when you're looking at like 80 to maybe 2,000 beds in a building. So you're now taking over an apartment block, and that's student housing. the university will come out and say, we're going to have a 5-year contract with you for your full number of beds. Whether the university fills it up with their students or not, you still get in your payment. That's a different model. That's a different ball. That's then the certainty and the reliability I can handle. But just for the every student, everyday person, student who's coming across, as I said, I don't work with that. There's too much reliability, and it's just not. I don't need to do that, so I don't. I'm not looking for that model.
Why complicate things that stress you out, and choose what you love? I think that's another important thing in real estate too. Do what fits with your life, not what fights with your life. If you see something working, continue to do that. If you don't enjoy something, then you can kind of peter out of it, sell off, and focus on what you enjoy, because it should be enjoyable. Now, question: all of our universities are shut down. And they are not even opening in September. Some are doing a hybrid, but most are online learning. What is your main learning institution or institutions, and how have they been affected by COVID, and what is government protocol in regards to reopening those as well?
So I want to bring in the real estate point around this, which is really interesting. So first and foremost, we have a crisis, a shortage of student accommodation. So it's like we've probably only got about 18% of beds that are tertiary institution provided, in other words, on campus or off campus buildings for students. The rest are people like me who come and say, oh, can I maybe have a communal house or a small little house that we've converted into multi-lets, and I'll be an off-campus, housing. So there's a mass. That's why I love that, because there's such a demand in that area. But your question is the same. Yes, all education institutions closed today, or they're looking at reopening some schools, but just certain levels. Now, it's certain age ranges. But as the moment, the tertiary institutions are still very much closed. But this is the interesting part, is that for a lot of those students who go there, if they were back home, they don't have Wi-Fi or internet. They're out in the rural areas, internet's not strong. Here in South Africa, internet is incredibly expensive, So they would much rather come to our units or come back to the residences where they get free Wi-Fi and actually stay there. So it's an interesting mix. That even if it's
the power of Wi-Fi.
You would have no idea. It's the major thing that's going there. And even if the institution is closed, they would still rather be in our residence, because they can still work from now the residence, as opposed to going home where they don't have books or they don't have a computer even. So without Wi-Fi, you're not online. So there's no online learning. So that's where, from my side, my units are still all full. They're still all paying every month, because they're actually wanting to be there so they can continue their learning online, but they're still going to be in the residences. So, or in my case, in my units. So an interesting insight.
I love that.
Now you kind of think, oh, we'll just go home. You can spend the rest of the year doing your online course at home. But in our case, it's not quite as easy.
I love that, Robin. This is so exciting, because it's not like we just go home. You go home an hour and a half away and you go home. But you guys go home. Like, are these mostly international students, or mostly people from different parts of Africa or different sections of South Africa?
So great question. We can definitely differentiate between, your more upper market, international institutions. And then you've got those that are definitely more your kind of entry-level universities, where they're coming from other parts of South Africa, where people, like for example, in some of my units which are sharing, it's going to be equivalent to probably at this moment $160 US dollars a month, and that includes Wi-Fi, water, electricity, and a shared room, right? And puts it into context that it's not an expensive. Well, in South African terms, it's still costly for them. But if you look at that from an international perspective, that's really cheap.
So $160 for them to rent a room from you, but it's shared. So there's two people in the room, two
beds in the room.
Two beds, two people in the room, and they have to pay you $160. That's all their Wi-Fi, their water, and their accommodation. How many bedrooms are your average student rental home?
So in these cases, we would be turning, in other words, if you're looking at, well, how do we look for these investing opportunities? We're going to be looking for 4 or 5 bedroom houses that we can kind of split up create maybe separate entrances, maybe add another a bathroom or toilet so they can be sharing that. So in this case, the one that I'm referring to is there actually are 10 students in total. There's a
They're getting $1,600 a month. You're getting.
In this case, no, because some of them are single. So
Okay.
if I'm in total, yeah, actually it would be if I'm in dollars. That's correct. $600. And it cost me about $70 to get rent ready. Now it's buy, rent ready, and then we're still getting that $1,600 return.
And how much would it cost to buy one of these units if you were to buy
Oh,
it?
at the moment in South Africa, if you're buying, well, let's say if you're buying rent ready, you'd be looking again probably about 90,000, probably about $90,000 US dollars. We'd be getting, again, like I mentioned, probably around that figure. I mean, I wish I could tell you in rands, right? Because it's simple.
It would be about probably what, 124,000, 132,000 in rand, probably around.
We'd have to take it
well,
by
yours will be
17.
different because you're a converter, but I mean, in conversion pricing, that's not that bad. And then, but then you have your 8% interest rate.
Yeah, well, that
So
would be
you
more.
are still cash flowing positive from these.
Oh, yeah, yeah. Oh, very much so. Our net yields need to be, for me, my net yield must be, if without finance, must be above 12%, otherwise I'm not getting out of bed.
I like your model, Robin.
Yeah.
You know what problem that we have with students here in Ontario? That the granite isn't high quality enough.
No.
I like your tenants better. They'll both go in one room. I'd love to see these tenants. You guys go sleep in one room. I want my granites and my own space. I need my own ensuite bathroom.
We have those as well, but that's just not my market level, around that. As I said, because, well, I guess it always depends on what your strategy is. But as I said, there's a massive demand for that entry level, right? Both from the professional perspective and from the student. And I've just found that works well. But again, Monica, as probably if you've been in student housing, then you will definitely know that it's not just having a good purchase of the property. If you don't know how to manage your students, you lose all and the yields that you think you got because of your high returns. And that for me is what the secret is I've figured out how to manage my students in such a way that they want to come back again and again. Yes. They're working in partnership with me, and all of that I think is the fundamental. And a lot of people just tear their hair out because they're like, oh, these students. But from my perspective, from the professionalism, if you start that from day one, then actually have everything in place. And I think that's where we have leveraged and benefited from that is in the management of them.
I think you're also providing an amazing service to these kids, because this is not like these party animal students like we might have here from living in Rosedale and wanting to go up to Western and having the best 4 years of their lives. These are people who are in a very different country. There's a lot of different obstacles, hardship, economic turmoil, government, political turmoil. And a lot of them probably have been through a lot of different things. And when they're going to relocate from their family, who's really kept them alive and trusted and supported them, for that family to send them away, that is a really big decision as a family. And they want the betterment of their child, but to know what risks it's taking even to be on your own for younger people, especially in South Africa, and to have a place that they can send them that has safe, clean, living conditions. That's an amazing service that you really are providing to these students, because the parents must really have that trust level built in with you. And I bet you must establish some sort of relationship with them as well.
And it's actually even more complicated than that. So firstly, you're right that for a lot of them, they are first generation learners. In other words, their parents most likely did not go to university or didn't even finish school. So from the first hand, a lot of them have the privilege in their view of now entering into a university and being accepted, which is a really big deal for them. Secondly, for us, and this, some people may chuckle, the challenge of getting a lease signed, because here in South Africa, if you're under 21, you're still a minor, which means we have to have the parent or at least the person paying the rent to sign the leases. to get them to sign it, traditionally here in South Africa, you're going to have to send it to them by email. They're going to have to go to the post office to print it because they're not going to have a printer in their own home. And some of them, the post office is kilometers away if they're in the rural areas. So it's a massive challenge. So in our case, the moment we introduced digital signatures, and of course we could do it by email, made a massive difference. You would not actually believe how challenging it is to get the parent to be a co-signature on the lease. Just that alone is a stumbling block, but we require that obviously from our side by law. So you're right, that the more a parent feels that this place has their kid's best interest at heart, the better that's going to be. And I think that's again where we, as in our business, pride ourselves, which is we're ethical investors. We believe we're providing a service way above our competitors are at the same price. And that's because, as you mentioned, we're in actually partnership. One of our things around being an effective landlord is to really get that your tenant is your partner. Your tenant is your key to unlock your property. Because without that, you just have a one-way, which is your expenses on the property. But if you have a tenant who is reciprocating and is viewed as a partner, then they're putting money back into your property, right, through rent. And when I see it from that perspective, my treatment of them is of a different nature, and that just increases the reciprocity and of course the relationship building. And I would agree with that. And then the third part around that is a lot of our kids here may not also have a mother or father or parents, or were brought up with their grandparents, because obviously we have a lot of split families, where parents are off to work and suddenly they were brought up just with their grandparents. So it's not just as simple of, oh, you've got parents, please get your parent to sign. Sometimes it's aunt and grandmother, and it's an interesting social structure that we're looking at, in creating this. So again, it's that understanding and sensitivity, which is really, really important.
It's true. It is. And where can more people learn more about you? You mentioned that you have you have courses. Do you take on joint venture partners if people are interested in learning to invest in South Africa? Where can people learn more about yourself?
The best starting point is at meetrobinbooth.com. So you can see how my name is spelled there. We were chatting about it earlier. This is a picture of Bali last year. But that's my name, Robin Booth, and you just have meetrobinbooth.com. That's the best place just to reach out to see a bit about what we've been discussing. And of course, then to send any messages from there is going to be the best way. On Facebook, they can just Google my name around that as well. And of course, if there's any other information or interest, certainly we can provide that on to people who are looking to invest or interested in anything else.
That's amazing, and there is a lot more, everyone, to learn about Robin. You are a man of many talents, and you have a bunch of different offers, and I love learning about them, and I'm so glad that you came on. I really honestly did not know anything about investments in South Africa, and I find it I make a point of not knowing much when we come on these things, so we can ask these real questions and really pull out real information, because I think it's a great place, and there actually is opportunity, and I knew nothing about it. I'm walking away now feeling a lot more knowledgeable about this investment and a lot more confident that real estate really is the #1 wealth builder. And anyone watching, and we do have people all over the world that will be watching this, no matter where you are in the world, it's just up to you to do what Robin did. Have a look at your country, identify opportunity, and be prepared to act. So thank you, Robin. I hope you have a wonderful evening. We will have a wonderful rest of our day. I hope you have a wonderful evening, and I look forward to connecting with you soon. And I did write in the chat, meetrobinbooth.com. And I would advise everyone to make sure to follow Robin on social media, whether it's on Facebook, or visit his website, and you will see all of his social media handles there. Thank you so much, Robin, and I hope to touch base with you soon.
Good, fantastic. Thanks, Monica. Great chatting to you.
Great chatting to you. Have a great evening. Bye.
Bye.